What's up, boys? I'm just putting a little music on in the background. Give me like 1 second. Okay. Let me turn this stuff back on here. Alright, what's up, boys? We got the FOMC tomorrow. Just wanted to do a quick live just to kind of go over the markets, the opportunity in the markets. Of course, we're going to be going over GME and AMC, of course, but then we're also going to be going over some additional stocks. So for the FOMC tomorrow, there's a 99% chance of no change. Typically, that's the case. The market doesn't really get it that wrong. Which is technically a good thing for the market. If we are looking at SPY, of course, on the daily chart, we had like a simple wedge that we broke out of. Now, the good thing I'll say is that you have solid support at 547.94, and even on the weekly chart, we did break through this fair value gap, and unfortunately, we did break the daily 200. But your stochastic RSI is technically coiling up here, which for me is like, that's a macro bullish indication that your stochastic RSI is coiled on a weekly time frame. And also, you can notice that there was a spike in volume. You did see a spike in volume here on our volume analysis. On the Japan carry trade, you saw a spike here on this initial dip, and then now we're seeing a spike in our volume analysis right here, which I mean is no coincidence considering that we broke the daily 200. For me, I can't really help but be bullish on this. I know we posted about this months back, and technically, like, our macro harmonic hit the short point here, but it didn't quite hit that full extension that we're wanting to see up in the mid 600s. I'm still bullish, unfortunately. Like, maybe it's a little bit irrational. Maybe you shouldn't be longing at this point. I would definitely go long at 537, but going in tomorrow, like, I'm just YOLOing it. I think really what happened is whenever Trump kind of got into office, I mean, you saw inflation coming down. I mean, if you want to attribute that to, his, maybe his policies, maybe his, tariffs. But we're looking at here at the 10-year break-even inflation rate. This is just kind of the market's guess as to what inflation is going to be on average for the next 10 years. It's kind of no coincidence that the S&P 500 follows this metric. Really kind of a better indicator might be inflation year over year. Basically what I think happened is, like, you saw inflation coming down, and kind of the S&P 500 is just kind of reacting to this. I think most of the S&P 500's gain is really just inflationary. But you're also seeing, like, on this dip, you're seeing kind of a divergence between markets. Like here, we have the S&P 500 charted over the DAX. So this is the DAX is the if we go here, DAX is just basically a Germany index. And you can kind of see a divergence here where the S&P 500 took a shit, and then you're seeing kind of money temporarily go into different markets, like German markets, and then possibly, I mean, maybe if we even pulled up Hong Kong markets, there might be some kind of, if we maybe pulled up the Hong Kong, so we pull up Hong Kong, and, like, what do you see? You see a divergence between the S&P 500. What you're seeing is, I think essentially what happened is, I mean, if we go back to our other chart with the 10-year inflation rate, basically the S&P 500 is just calming down. It's kind of digesting lower inflation, and of course Trump was kind of like a disturbance, but to me you're seeing a short-term pullback in SPY you're seeing a divergence between different economies like Hong Kong and Germany. But then you're also seeing with other economies, like if we pull up the Japan, how do you say it? Nikkei? I don't know how you say it. You see it's trading literally right alongside the S&P 500. This kind of tells us a few things and kind of paints a few pictures for us. But let's go over GME and AMC. GME, there's not really too much to talk about. In fact, I really wouldn't even mind us creating another one of these humps in GME. Why do I say this? Oh, why do we have this on our chart? We don't need this. So on GME, your stochastic RSI has already accelerated to the top of the range. Typically, this is just like it just, sometimes what you'll see is sometimes price will like kind of slow down to the upside as the stochastic RSI gets into the upper range, and then it makes its kind of explosive move. Like you'll see here. Whenever we first had this kind of initial run, like the stochastic RSI, when this run was initiated on the daily chart, was already in the upper range, which is fine. But typically, sometimes what you'll see is that it's just a dead bounce, and not dead in the sense that like it's not valid, but dead in the sense like it needs stochastic to reset again. And this is kind of sus as well. GME almost fills these gaps, and it may sound absurd, may sound like an absurdity, but it fills these even if they're extremely small. That's still a daily gap, and it sounds absurd and it looks absurd, but if you get a shitty FOMC tomorrow, you know, if traditional markets shit the bed, then GME is probably going to shit the bed, which is fine. I'm also taking stock requests if you wanted me to look at other stocks. I know that we've kind of beat GME and AMC to death here. We've been looking at this every day for the past almost year. So, of course, we're going to look at some other stocks here, like HIMS, Rocket Lab. I'm going to be live here for maybe about 30-40 minutes. We've kind of beat GME and AMC to death. So unless people have kind of specific questions regarding GME, AMC, I mean, we're just going to have them up. But really, I want to talk about HIMS. This is... HIMS, I'm not against actually waiting until HIMS, because you've technically broken the daily 200, which is this green line here, and that was at 32.15. And not only did you break the daily 200, but you also got a rejection from your daily value area high, which is kind of telling us you technically have room to go back down to, I don't want to say your daily 200, but definitely down to this next fair value gap at 27.48. For me, it doesn't necessarily matter, because I would dollar cost average into this stock anywhere in this zone between the daily 200 at 32.15 and the daily 200 at 25.61. HIMS is kind of it's really a robust company, and I'm kind of like, this may sound a little bit crazy, but it's kind of like getting into Amazon, like when you know, the tech industry was kind of starting out and kind of fulfillment industry was kind of booming, because you got to kind of think this company is it's bringing one. It's competing. It's for accessibility because I mean you're looking at other companies like CVS, Walgreens, companies like this, where like you have to go in person to kind of get your medication, and they're kind of obliterating them. I mean, they're in a market where they're competing for accessibility. They're competing for you have to kind of think they're also a tech company. They could produce technical health products, but they're also in the healthcare industry. When you have a large balance sheet where you have kind of at this point millions in capital, you can actually produce your own medical products, and that's kind of an exciting thing to think about, a company that has so much diversity and is such a robust company where it just has so many options on the table. You kind of have to buy the stock. You kind of have to. It's not, you're kind of forced to buy HIMS at this point, especially on this retrace. So we retrace from 72.81 down to, that's a 56% drop. I'm buying HIMS. Like you got to buy HIMS. If you come anywhere near the daily 200 on HIMS, like you're almost forced to buy it. Like your hand almost has to click the buy button on HIMS at this point. You kind of have to. We posted about Dollar General earlier on my Twitter. Guys, we're already up. We're already up on Dollar General, and we're breaking the daily point of control at 81.17. If I were to make this a little bit more accurate, I would say you would probably get an initial rejection after daily 200 at 92.80, and then have a continuation back to the upside, something like this. What it would look like something like this. Dollar General is, it may not seem like it, but actually has a unique market, and it may not be something that people are thinking about because they're probably thinking like who the hell goes to Dollar General? Isn't it just like a shitty Walmart? But Dollar General actually, they buy specific locations, like typically you'd see them in not just rural areas, but kind of urban areas, but specifically where like you don't have to drive 25 minutes to a goddamn Walmart when you have a Dollar General right down the road. And that's their kind of competitive advantage where, like, I really don't even see them, I really don't see companies like Walmart or even Target or, other grocery chains competing in that way for accessibility. Let's actually pull up Walmart. Walmart's, I think, approaching the daily 200. Yeah, on the weekly, your stochastics oversold, and a stock like this hasn't revisited its daily 200 since $51. I kind of want to overlay Dollar General. Of course, if you guys want me to look at AMC and GME and you have any questions, just ask them. At this point, we've kind of beat those stocks to death. Like, we know MOAS is coming, but unfortunately, we just don't know when. Yeah, this is kind of interesting. So, yeah, there was some kind of divergence between Dollar General and Walmart right up in November of 2022. So, I mean, I guess these stocks were still kind of recovering from COVID, but obviously Walmart just didn't give a shit. But now you're seeing, this is kind of weird as well, because now you're seeing a more recent divergence between Walmart and Dollar General, where, I mean, this isn't necessarily that much of a retrace, but I mean, you're talking 20% for Walmart. Amazon, somehow Amazon slept on, even though it's a blue chip stock. I know that this sounds counterintuitive, but it is slept on. Where this kind of news comes out and like no one really gives a shit. Where like Amazon is now competing with NVIDIA. Yeah, it's literally producing chips. Amazon's latest chip, Trinium 2. Um, like Amazon's a blue chip stock, and somehow people are still sleeping on it. Somehow, like it doesn't make sense. It makes sense in a way that like these market makers and big players are kind of wanting to buy this stock on a discount, but it's getting kind of ridiculous at this point. I would be a buyer here at the point of control, and that's sitting at 186.02. And these are kind of long-term ideas here. It's not just like I'm buying options for like the next 2 days, then I'm out. Like these are long-term ideas. This is a long-term idea. UPS, who the hell? How the hell is UPS gonna go out of business, son? Like it's not. It just hit its point of control at 116.14. I'm actually longing UPS. I mean, if it breaks out of this channel, I mean, you're probably, and actually a coincidence, you're breaking out of the channel at the same point that you're breaking the daily 200, which you've been continuously rejected since it broke at 178.33. Yeah, UPS isn't going anywhere. Walmart's not going anywhere. Amazon's not going anywhere. So I'm perfectly fine longing UPS at the point of control at 116.14 all the way until minimum the value area high at 168.48. Can I take a look at ENVX? Yes, sir. Wait, before we... Okay, actually, no, I'll look at that. But we're going over... We're going to go over AMD next because we absolutely nailed that. ENVX. What's up, Stefan? We're looking at this stock for you, my friend. Oh, shit. Wait, something's going on here. We'll get there. ENVX. Innovix? It's kind of an interesting name. All right. Whoa. This is really, really choppy. This is really, really choppy here. Yeah. This is, I don't know, to be honest. I don't know. Technically, I mean, let's see, you have a gap. You didn't quite fill the gap. I mean, that's pretty close at 697. Technically, it's bearish considering you just got a rejection. You got a rejection from your value area low at 830 while your stochastic is in the upper range. So by a technicality, it's almost bearish. Like if it does something like that, it could rebound. For me, it's just too choppy. I mean, you kind of look at the chart and it's just like it just looks incredibly unpredictable. I wouldn't take a position in this unless we came back down to 659. I mean, is this? Yeah. For me, is this? It just looks too difficult. I mean, if I had to make a decision on it, then I would just say it's technically bearish right now, and until you have a fair value gap at 665 that could act as support while you fill this gap here, and then I could see some kind of rebound. But it looks really, really choppy. But yeah, that's just my opinion on it. Let's look at AMD. Yeah, I mean, it's just really, this is just kind of like a perfect setup for us because this is just like a low risk trade. Now, something that I will say, your stochastic's in the upper range on the daily, which isn't necessarily a good thing considering we haven't made that much progress. This was our initial long zone. As you can see, we've just literally been trading in a parallel channel. And you just get a continuous rejection. Once you lost the daily 200 at this point, and this was all the way at 163, you've literally just been trading in this parallel channel and just getting rejection from the daily 20 SMA. Now, technically this is bullish because if you were to break this macro trend, which I think is happening with AMD, this was our initial long zone all the way down to 92. I have no problem taking a position in AMD here, and I'd probably say your first target is back to your value area low, which is this fair value gap, and also your daily 100 at 124.61. But this was really our long zone. This green box that we've had for probably a few weeks now was our initial long zone. You like the company's potential for their tech? Yeah, I mean that also plays a part as well. I mean, if it's kind of like a long term, trade, that kind of makes sense. I mean, if they have good fundamentals, and you're kind of just willing to kind of sit out the choppiness, and you're not like kind of actively trading, then yeah, I think that's. I say that's reasonable. Another stock is Rocket Labs. I think we're coming down to the daily 200 at 1438, and then I'm about to load the boat. As you can see, the stochastic RSI recovered from the lower range. We were able to retest the daily 20 SMA, and we got this rejection from this fair value gap. This would just be a gift come true from the markets if you gave us Rocket Lab at 1438, so at the daily 200. Because I'm buying there. I'm buying at this fair value gap at like $14 all the way back to minimum the value area high, if not all-time highs. If people don't know what Rocket Labs is, I guess we could look up the stock real quick. I think it's rocketlabsusa.com. Oh, shit. Rocket Lab. Oh, I think this is Rocket Lab. I wouldn't necessarily say like a SpaceX competitor, but I mean you kind of get an idea of what they're doing. But yeah, Rocket Labs at the daily 200 is a buy, and that would put us down, I think, over 50% if we're not already. Yeah, that would put us at almost a 60% discount right there. So Rocket Labs is another interesting stock I'd kind of take a look at. So we went over AMD, UPS, HIMS. These stocks are just kind of my top picks, I guess. I really just don't see how, like, we haven't entered a bull market. I mean, a bear market yet. You know what I'm saying? I think this is a little bit suspicious, almost as if it's not. Certainly if the Japan carry trade wasn't enough to destroy the markets, well, I don't think this is. I think all this was just kind of like markets digesting Trump. Like whenever he got in, you saw, again, like we went over this in the beginning of the video, but you saw the markets just kind of digesting lower inflation, and then you kind of saw like a temporarily, like if we look again at the DAX, so this is just the German index, you're seeing kind of money come out of the S&P 500 and go to different economies like Germany, Hong Kong, but things like that. But then you're also seeing the S&P 500 trade. You're seeing the S&P 500 trade just like the Japan. This is basically the equivalent of Japan's S&P 500, which is kind of interesting. That there's some kind of correlation between Japan. Like we can't really even ignore it at this point. But I think what you're seeing is just like inflation cooling off a little bit. The market's taking a cool down, and then you're seeing like kind of money go into a few different other economies, and then you're gonna see that kind of snap back. And another thing I'll say is like whenever you look at the China money supply, we'll look at M2. Where is this at? Maybe it's M1. You're really just seeing the money supply in China kind of skyrocket, and then if you go over to economies, we should be able to see money supply. Yeah, M2 money stock. I'm not sure if that's it. United States money supply. Yeah, you're seeing our money supply just took a fat dump. Which is fine. The markets are just cooling off. I don't really see any reason to be like incredibly concerned with the markets right now. In fact, like when you see like a stock like Tesla down over 50%, I'm buying the dip. You almost have to. You're almost, you gotta buy the dip at that point. But yeah, these are just long term ideas. I think this is kind of like a great opportunity in the market. Especially for new investors to kind of build a long term portfolio. What I would do is I would just kind of look at the market, say, hey, I see a bunch of just fundamental stocks that have, like really robust companies, like really like opportunities to kind of for growth. I mean, just literally just growth stocks, like with great fundamentals. Like, and unfortunately, it's not sexy. It's not like buying options and you get 400% gains in one day. But that's what I would be thinking about. Just looking at these different stocks and kind of building a long-term portfolio. Of course, that's kind of ironic coming from somebody that's investing in GME and AMC, trying to make $1 billion here. One thing I'll say is that on GME, I think our next options expiration, of course, is this Friday. So we have a monthly OPEX on the third Friday of each month. So you have the OPEX on the third Friday of each month. And then this red one here is a quarterly options expiration, which, I mean, technically happens on Monday on the 31st. But and then you also have another just weekly options expirations on the Friday before, on the Friday 28th for GME. Maybe a little bit of tinfoil. But these are different options expirations. Which I find kind of interesting, where like you shit the bed between this like market expiration, you bottom in between this market expiration, and then you have your run, and then the run ends by the next options expiration. Well, it's like technically it's kind of like tinfoil, but it's really not, because if you think about it from like a market maker's perspective, that's kind of exactly what you would want to do. It's like you'd want to contain the move within that kind of atmosphere. Because if you let it run for too long, then you're just getting absolutely screwed. And there's no amount of money in the world that could save you from that. Yeah, we're gonna go over costs. I think cost is extremely slept on as well. Like, people don't really talk about costs either, which I find kind of unusual considering costs. Yeah, it doesn't have options, but that shit went 15,000% or some shit. Like, how do we ignore this? How do we ignore the fact that this random headphones company went from, it's over 15,000%. How can we ignore this? I'm not sleeping on costs. I'm starting a position in costs. You can sleep on it if you want. I'm not sleeping on costs, bro. Costs actually bounced from the bottom of our fair value gap, which, if you can see, was our previous point of control, right? I mean, literally, this was exactly where our previous point of control was at 467. Now, hopefully that holds. It looks like you're getting some kind of rejection from the daily 20 SMA. But hopefully this holds the support. If this doesn't hold, then I'm almost positive that your value area low at 359 would hold. So I have no problem dollar cost averaging into costs here. But yeah, these are just the meme stocks here. Of course, alright, let's bring out the tinfoil for AMC. Let's bring out the tinfoil. People in my Discord know how much I hate fractals, too. But we're bringing out the tinfoil. So I'm gonna like clickbait. Just so I can clickbait people, I guess. We're bringing out the fractal. Holy shit, Moas is tomorrow. Moas is tomorrow. No, but you can actually see how crazy similar this is to the point I can't even like kind of deny it. Even though as much as I hate fractals, I can't even deny that shit, because it's just the same structure. Because it's not really just that it looks similar, but also you're getting the same you have this kind of weird double bottom pattern, which I think is almost, this is either that's the double bottom pattern, or it kind of took a different form as far as like double bottoming on this kind of slope, which is kind of unusual. But you get this initial peak above the daily 200, a rejection at the daily 200, a final rejection of the daily 200, and then you have your move, which is, I mean, it's seriously eerily similar. Like, you get this peak above the daily 200, you have this weird M shape where, again, you peak above the daily 200, but you get this rejection at your point of control. So you peak your head above that daily 200, get a rejection at that point of control at 490, and then you quite literally just make a low, get a rejection from the daily 50 SMA instead of the daily 200, and then you just make a lower low. Like, and it's just like you almost can't even ignore it at this point, and it's very unusual. It's very unusual, and God knows how much I hate fractals. Everyone knows. Everyone in my Discord knows how much I hate fractals, but you almost can't even ignore it. But no, I'm just gonna use that as clickbait. It's not actual TA, but I would say the first step for AMC, like baby steps, we need to take baby steps. We need to get back into that value area low at 324, and we need to recover at minimum the daily 20 SMA, which that's sitting at 314. Like, baby, if you're talking about baby steps for AMC, you need to get back in this pocket. You need to get back up in here. You need to get back up, and then you really have a chance to come back up to at least your value area high on the daily at 590. But let's just talking baby steps for AMC. GME, I don't know what is going on. One, you shouldn't have traded below the daily 200. You shouldn't have done that. Secondly, if you were gonna do it, we need a better rebound than this. I mean, because you have a lot of resistance here, and it's probably not going to be broken just by kind of inching your way up. You need like a 10% day where you break the 200 and you break the point of control at 2790. Because, like, realistically, you're not going to be able, especially with volume this low. I mean, look how low volume is. It's like, and it's declining. Which is not necessarily a bad thing. I mean, volume was extremely low before the May move, which may or may not be a coincidence. But periods of very low volume is not that good. But volume has essentially died in this range, and you need a spike in volume. You need something. You need something to kind of get yourself over this range, because this is going to be difficult for price. Unless you, and again, like, you need to explode through this, like, little bullshit, like 2-3% days isn't going to do shit. Like, in fact, I would almost rather see us just come back down, double bottom, and then have the move, like, while volume is so low, because I don't know, to think that we're just kind of slowly, like, make our way up is kind of a pipe dream. Like, you almost need some kind of explosive move. Because people think, like, algorithms and shit are, like, very, very complex. And, of course, some of them are. But, I mean, to be honest with you, like, there's a lot of them that just operate off of moving averages and, like, simple VWAP strategies. Like, and it may seem like a very, like, oh, we just lost the daily 200. Like, who gives a shit? But, like, it's a pretty freaking big deal. Like, you need to recover that, like, soon. But we'll give it until March 25th or March. We'll give it until the end of the month to kind of see what price action does, and then the next range of opportunity is till April 17th. After that, your Roaring Kitty just took us a full 365 days. That son of a bitch. That's brutal. That's brutal. Even for me, that's brutal. Even for me, it's a little brutal. Oscar Health. This one's an interesting stock as well. Um, yeah. So this is I'm looking at the right thing. Yeah. So this is all Oscar Health. This is one of the stocks I've been posting on X. I mean, as you can see, our daily, and then if we go to our weekly stochastic RSI should be oversold. God, I hate when it does this. So we'll go to Oscar Health. So our daily stochastic RSI is oversold. Maybe another thing we can just pull up really quickly here. If we pull up our stochastic with a heat map, just so we can see multiple time frames. Yeah, I mean, on multiple time frames, our stochastic's oversold. And then, of course, let's go to the weekly chart. So honestly, our weekly looks like it has a little bit of room to actually kind of get into that oversold territory. Now, something interesting is you're seeing the stochastic RSI trend here that may be able to catch the stock. So I think on the weekly you can be contained until the bottom of this fair value gap at 1236, which is kind of lining up with what we're seeing on the daily chart of like, this is the bottom range of your fair value gap at 1269. Almost if you lose that, I'm kind of inclined that you dip into the next fair value gap at 1023, and then that's kind of where I'm loading the boat. And this, I don't really want to call it like a Wyckoff thing, but it almost is, where like you're in this phase of like, I don't want to call it like distribution, but like you're coming down into a spring at this fair value gap at 1032, and then it can have a recovery back up to the daily 200 at 1674. So Oscar Health, if it goes to 1023, I'm buying the dip. Especially when you've been in this kind of realm of consolidation for 406 days. If you break out of a consolidation that large while creating a spring, yeah, that shit's gonna go crazy. What's up, BG? What's up, brother? Appreciate you checking this out. Yeah, unfortunately, the only thing I hate with live streams is like you start speaking facts in the beginning, and then people join in, they can't see like the absolute facts that you were spinning in the beginning. Because like we just went over a shitload: UPS, AMD, Rocket Labs, costs, AMC, GME. We also went over the FOMC tomorrow, and we were looking at kind of like different metrics, like the 10-year break-even inflation rate. We're kind of looking at like different markets, like different like money supply, the DAX, so the German stocks, Hong Kong, like different economies like that. Hold on, why is the Japan index looking bullish? And that may be this might be a freaking interesting thing, is that literally the Japan index, if you look this up, I don't even know how to say it. It's some kind of weird pronunciation of how you say this, but this is basically like the Japan S&P 500. It literally just look when we saw the Japan carry trade, it was literally the same shit. Like that's like they're almost identical, and it's kind of crazy. There's some kind of connection here, and I'm not quite sure what it is, but you're seeing the Japan index recover from the fair value gap here back to retest its daily 200, while the weekly stochastic's oversold. So it's bullish, bro. If I'm bullish on Japanese stocks, I'm bullish on the S&P 500, and it's almost kind of telling us that this kind of recent dip is kind of it's kind of bullshit. Like, it's kind of what it's telling us. Like, it's kind of telling us that this recent dip of the S&P 500 kind of cap. And you're also seeing like it catching itself on this stochastic RSI trend here. I mean, your weekly stochastic RSI on the S&P 500 is oversold. And you're talking about stocks like Amazon down over 20%, Tesla down over 50%. I don't even care if I go down. I'm going to go down like a freaking soldier. I'm going to long everything in the goddamn market. And that's why I really want to make this video, is because like you start picking out great fundamental stocks. Like stocks like UPS that have been suffering but aren't going to go anywhere. Like UPS is not going anywhere. You're talking about stocks like AMD, Oscar Health, Rocket Labs, like Cost. Like when we went over, Amazon, and then other stocks like ServiceNow, and other stocks like Snow. Like if we look at Snowflake Inc. Snowflake Inc. is like a database. I don't want to say database, but like data provider. But this is a really interesting stock, and I think they're currently in talks with Google right now as far as a partnership. But I mean, if you believe in tech stocks, you believe in like kind of artificial intelligence stocks, well, this might be the stock for you. But we were talking about this at this fair value gap down to the daily 200 at 142. But I'm a decently strong believer in this stock. But I mean, some other good fundamental stocks would be like Shopify Inc. E-commerce isn't going to go anywhere. The daily 500, daily 200s at 87.96. Just like good, fundamental stocks. Like this. What was the other one we were looking at? Dollar General. Guys, who the hell is trading Dollar General except for me, man? Like, who do you know that is like, Dollar General is where it's at, bro? No, like nope. You gotta talk about some hyped up bullshit stock. No, I'm actually telling you, Dollar General might be where it's at, because they have like this like unique competitive advantage, like in certain communities where like, because I'll say, for example, if I'm going to Walmart, I have to drive 20 minutes to Walmart. To Costco, I got to drive like 25, 30 minutes to Costco. I'm not doing that shit. And especially like, and I don't want to say like, maybe like I don't want to say like more like, probably like even in urban areas, but like if you're talking about areas like maybe that even have like a student population, or maybe just aren't like super robust, like New York, like probably like might be like an idea for like accessibility. But a stock like this, you trust me, they have like this unique competitive advantage where they place stores like in specific locations where like I don't have to drive 30 minutes to fucking Costco. No, but Dollar General is currently testing its point of control at 81.17. So if we can really make it above this point, I mean, you're almost guaranteed the daily 200 at 92.80. So Dollar General is kind of a unique stock, and I can almost guarantee that this gap is going to be filled at some point at 123. But this is just kind of like a long-term growth stock that's kind of slept on. What's up, Ghosta? Ghosta's the GOAT. Ghosta. Yeah, going back to the S&P 500, I mean, you gotta kind of get some balls. You gotta get some balls and just say, you know what, fuck it. Like, even if I'm just gonna long the freaking market, who gives a shit? I mean, realistically, looking at every single previous downturn, like it's almost always recovered. What was this? This was a pretty brutal drop. That was just 10%. Imagine you sold here when it was down at 10%. What was this? The Japan carry trade, down 10%. Down 10%. Maybe third time's the charm. Maybe the Bears won. Maybe not. Especially whenever your weekly stochastic's oversold. I'm taking my goddamn chances. I'm longing the shit out of the market. Because, truthfully, I want to see this full extension. This thing has been actually kind of crazy because what was the next level? 2.618. So the first level was like 2.618 extension. Then you had the 3.14 extension on this harmonic, and now it's like, well, let's just, we might as well do it. Let's just go to the next level would be the 3.618, and this is like upper 600s, which I think is kind of like, if the SPY recovers from at least this fair value gap at like 567, I mean, you're almost guaranteed to go. You're almost guaranteed to go upper 600. There's not quite enough evidence to be fearful yet. Literally, like, you're just seeing kind of the markets react. I don't want to say to Trump, but like you're kind of just seeing market factors like inflation and different things like that, where like the market is just kind of retracing, and then you're kind of seeing a little bit of capital kind of go into different economies, German economies, into Europe, into, you know, Hong Kong, like different economies like that. But I don't think that's gonna last for very long. All right, we went over a shitload of stocks. I'm gonna take some last requests here before I call tonight. I just had like about an hour to do a stream, and I was like, you know what? Let me just do a stream, spit some facts for a little bit, and hand feed you some stocks. I'm personally invested in all these stocks I just mentioned. Well, maybe not all of them, but like, I actually have money in Dollar General. Like, and I actually have money in Dollar General. Like, no bullshit. Like, I bought the fucking dip on Dollar General. But I'll take some last requests here before I call it a night. But let's keep our eyes on the market, and let's keep our eyes on FOMC tomorrow. Maybe kind of like an interesting strategy that I was kind of thinking about too, and I might make a video on this, and I wouldn't necessarily do it on FOMC, but kind of like a short-term option straddle. But I was thinking kind of like a strategy as far as like calendar spreads. I think calendar spreads might be more efficient, but just kind of like picking specific stocks where there's kind of like an imbalance and with the market makers as far as like what they're expecting volatility wise, and kind of like developing a calendar spread strategy just based around like certain earnings reports. Like, for example, we could low-key do that on even meme stocks like GME and AMC. We could develop a strategy around that, which actually kind of might be interesting. But I might make a video on that. That might be my next video. I might do some more like educational videos on like certain like option strategies, because I think that might be interesting for some people. Kind of what I'm getting at here is like, I don't know when GME and AMC are gonna MOAS, but like post MOAS, like I want to kind of teach wealth preservation, and kind of, because people are gonna get a shit ton of money and like they're just gonna have no idea what to do. The book says periods of low volatility are followed by periods of very high volatility. Yeah, I mean, I would say that might be true. I would say that probably is true. Yeah, I mean, you're right. All right, well, I'm taking some last requests here if you want me to check out some stocks. Even if you want me to check out AMC and GME, I guess I'll do that. Even though we've kind of gone over that kind of a billion times here. But yeah, all eyes on the Feds tomorrow. I don't think it's going to be very exciting. I don't think there's going to be that much volatility. Kind of because the market's already priced it in, so it's not going to be that. I don't think it's going to be that interesting. But hopefully we get some kind of upshift in the market tomorrow. And that's in 16 hours and 9 minutes. All right, I'm calling it a night, boys. Appreciate you guys for watching, and I'll see you guys in the next one.